Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, trading fluctuated wildly during the Federal Reserve Jerome Powell's remarks, igniting much volatility across the board in the New York session as investors now digest most of his comments about how long the central bank may need to tame inflation. His comments renewed investors' hopes for a less aggressive monetary policy that wavered after last week's stunning strong US job numbers or the non-farm payrolls. However, by itself, it's unlikely to change the current pace as the market is looking for the next 25 base point from the US Fed. Powell did say, though, on Tuesday that progress is being made on inflation, though a long battle remains. Viewing the non-farm payrolls report in January, Powell said, "We didn't expect it to be that strong." This was when he was talking at the Economic Club of Washington in DC. But however, it shows why we think this will be a process that takes a little bit longer than expected. So looking at the technical aspects, we can see that the Australian dollar has shied away from that 60-day moving average, seen around 68 figure 35, and now looks to the top side of the range around 69.95. If we do see a break above there, then that might be a little bit to the bullish potential of rallying back towards the top side around 71 cents. However, touching that top side overnight and now backing away slightly, and also the technicals are still remaining negative, we could see another down test that is towards 69.40 and still vulnerable towards that 68 figure 20 60-day moving averages. Looking at the euro, we can see that the market is respecting the level around 106.20. After briefly looking there, the market is still somewhat poised for another down test. I feel that we could see a challenge here, but I'm not going to get too bearish yet unless we see the dollar index break above 104 as it trades around 103.2030 at the moment. If so, then that would see further indications of 105 and the dollar index moving up towards the region of 106. The dollar yen was a little bit weaker after its recent post-jobs number that rallied around the highs around 132.80.90, a key level. And backing away from there sharply, the market may actually take another test towards this region due to the fact is the RSI is holding over the midway point and the MACD is still relatively firm. If so, then we may see a challenge towards 132.80.90, and if cleared, would see a move up to higher now, 136. Sterling still respecting that key level, which is at 119.55 after bouncing off there overnight, and now looks towards the region of 121.45. Not the strongest of technicals, so I feel that the market may fail towards its topside recovery or bounce and look back towards that 119.5 and reassess. Very whipsaw price action, and I feel we're getting close to a flag that might see the gold break down further, and that is towards the level of 1,860.65. A break there would give further scope down towards 1,820 to 26. It does need to clear that key level around 1,881, and if so, may give a little bit more upside step towards 1,896. But at present, I don't feel that may emerge, so the downside still remains vulnerable. Well, we did explode to the top side overnight and breaking through that level of around 75, 70.80. The market now looks towards the region of 78.20.45. Reassess from there, as if it fails, then this would see the market tumble all the way back down towards the region of $73 a barrel. Well, that wraps it for the morning. Thank you very much for joining me. As always, look after the intraday report and hope you enjoyed the great start to the day.